Hi, thank you for joining me today. Today, using our digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, we have allotted time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on valueline.com and our YouTube channel within the next 48 hours. Lastly, as an added bonus, attendees will have the opportunity to receive an additional stock recommendation. I will provide details at the end of the presentation. To start, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the ValueLine Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by ValueLine's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investment banking business with any company, including the 1,700 that are included in this service. ValueLine does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. As a jumping off point for our stock search, let's start with an overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. The following content was written by Harvey Katz, ValueLine's managing editor and chief economist. Earnings season is in high gear, with early results providing some pleasant surprises. True, expectations had been low after what was probably an unimposing first quarter for the economy. Overall, we think first quarter earnings will turn out decent for most companies, but likely fall short of the stellar gains posted in 2018. That was expected, as the economy did encounter some choppiness early this year. The economy is now chugging along, with favorable recent trends in borrowing costs, including mortgage rates, providing support for the consumer and housing markets in the coming months, while data on industrial production and factory usage suggests that activity on the business front will hold up well. Of course, we may not see a duplication of the strength on display during the middle of last year, when growth averaged close to 4%. Still, the economy should put in a credible performance in 2019, with GDP growth of 2% to 2.5%, buoyed by a dovish Federal Reserve and low unemployment, but held in check by slowing global growth. Indeed, headwinds continue to blow in from overseas, where growth forecasts are coming down, especially in the Eurozone, with a first-half contraction quite possible. Then there is trade. There, negotiations with China have yet to end the current standoff, while our nation has threatened to impose new tariffs on the European Union and Canada. Expectations are that these issues will start resolving themselves in the months ahead. Should that not be the case, some fallout globally could be felt here. However, a U.S. recession seems unlikely at this time. The Federal Reserve is patiently watching things unfold, with the bank expected to keep interest rates unchanged for much of 2019, with any late-year shift, either up or down, contingent on the ebb and flow of events. We think an even more dovish approach could be on tap for 2020, when GDP may slow further. The bulls still hold the upper hand, with a flexible Fed and reassuring earnings a tough combination to beat. In conclusion, equities have done well this year. So while there are risks after such a run, the fundamentals remain sufficiently strong for further market gains to lie ahead. Harvey's commentary, and especially his conclusion, can help us in our search for one stock to buy right now. He mentioned the risks following the recent stock market run, but also that fundamentals remain strong. We can use these details to put together a strategy, and thankfully, Value Line's subscriber tools will enable us to do just that. Before we formally start our search, please note that we are currently on our homepage, www.valueline.com. On this page, you can access free of charge daily market commentaries and analysis, as well as general interest articles written by our analysts. Examples of such content are analysis of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. This last detail is of particular importance presently, since we are now in the heart of earnings season. In fact, 6 Dow stocks reported results yesterday or this morning, and we will hear from Visa after the bell today. I am now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to the many important areas of our website, including Browse Research, which is the main home for our core equities products. I can also head to our home pages for our monthly stock selection services, as well as our investor tools. As you know, the point of this presentation is to find a stock to buy right now, so let's go to the screener and get started. This tool can also be found under the Find Ideas tab at the top. Subscribers have access to more than a dozen preset screens, as well as almost 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. Let's start with risk. There are a load of metrics that can be used to assess quality and stability. One that I recommend is Value Line's Safety Rank. The safety ranks measure the total risk of a stock and are arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. For more information, I encourage you to peruse our ranking system guide, which is available via the investment education section of our website. In addition to guides, users can access a glossary of terms and articles written by our analysts about basic financial strategies and other important topics. This is all free of charge. So to get started, I click on Safety Rank. And as mentioned, I want to focus just on the rank 1. These are the most financially sound companies, and their stocks have a history of relative stability. It is worth noting that of the nearly 6,000 stocks in our database, only 130 garner this top rank. Next, Harvey mentioned that economic weakness in Europe and ongoing trade concerns with China and other nations. Thus, I'm going to focus only on companies headquartered or domiciled in the U.S. The vast majority of these companies derive the bulk of their revenues and profits stateside. I'm going to select the country of domicile field and choose U.S. from the dropdown. Now let's make sure that the companies we focus on are expected to meaningfully increase their bottom lines over the next few years. This is where Value Line's 3 to 5 year financial projections come in. I want to highlight that Value Line is one of very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. So let's add in projected EPS growth rate, and I'm going to set the low bound to a healthy 12%. Down to 24 results. We're getting close. I want to add one last field, and it is the new feature from Value Line and is only available to our subscribers. It was developed by our in-house quantitative research team. The 18-month target price range, as the name suggests, seeks to predict the stock's price over an 18-month horizon in terms of a range. In addition to the high and low values of the range, the percentage difference between the current stock price and the midpoint of the range is provided. The percentage may be thought of as the most likely potential profit. The larger the percentage, the greater the possible price appreciation. The 18-month target price range is only available for the 1,700 stocks covered in the Value Line Investment Survey, and this purely quantitative measure is displayed on all digital reports. We have also added the 18-month midpoint percentage to our online stock screener, so we can use it today. For the midpoint, I'm going to set the low end to 15%. Thus, according to this measure, the most likely scenario calls for the following stocks to increase in price by at least 15% in 18 months. And as you can see, we're down to 12 results, which is nice and manageable. A quick scan of the list shows some heavy hitters, and any number of these may well fit nicely in your portfolio. This obviously all depends on your strategy that you employ. Earlier today, I evaluated this list, and I decided to highlight and recommend Brown-Forman, ticker BFB. Brown-Forman is today's one stock to buy right now. Before I dive into BFB, please note that screens can be saved and revisited later by utilizing the button at the top. Clicking on the company name will take us to the digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, and hidden so you can create your own customized stock report. Once you alter the presentation to your liking, you can save the changes from the sliding horizontal action bar. The next time you come to this report, it will look the way you set it up, and you can apply these changes to other equities. Although perhaps not a household name, many of its products are. From the business description module, we can get some information on what Brown-Forman does. Brown-Forman produces and sells distilled spirits. Popular brands include Jack Daniel's, Finlandia, and Korbel, among many others. It employs about 4,800 individuals and has a market capitalization that exceeds $16 billion. Our digital reports possess a great deal of information and analysis, and I can't cover all of the useful modules. However, I do want to discuss a few features that highlight Brown-Forman's prospects and investment merit. First, right off the bat, we see Brown-Forman's is ranked 2 above average for timeliness. Like safety, Value Line's proprietary and time-tested timeliness ranks range from 1 to 5, with the 1s and 2s expected to outperform the year-ahead market. Moving further down to the 3 to 5 year projections, we see that our target price range is currently 80 to 95. BFB's current price is around $53, which suggests plenty of room to run. Also, from the valuation module, we can get a good look at the company's recent annual financial results, as well as Value Line's proprietary estimates, which are in bold. As you can see, Brown-Forman's financials are all trending in the right direction. Lastly, let's head to the top and evaluate the new 18-month target price range. As you can see, the midpoint is 62, suggesting a 15% gain from today's price. I should note that the range is calculated and updated every week, and the midpoint percentage is updated every day using the last closing price. We've also included a quick explain section for more information. I now want to highlight our classic PDF reports, which are available for all digital subscribers. They are available using the button here on the right. We just published a new report on BFB, and since we've already covered the numbers, now let's see what the analyst has to say in the commentary. Many subscribers consider this the most important part of our report. Senior analyst Naira Maharaj is quite bullish in regard to Brown-Forman. Here is an excerpt. Long-term prospects appear bright. We are optimistic that tariff-related developments will probably be less of a factor over the 2022 to 2024 timeframe. Also, portfolio reconfigurations and improvements in route-to-market capabilities in mature markets should bear fruit over the 3 to 5 year timeframe. Although competition is fierce, Brown-Forman's actions are to continue to solidify its position as an industry leader. Investor support for this high-quality, timely holding has improved. The stock price has increased over 12% year-to-date, thanks to broader market buying and an upbeat outlook. Investors may want to consider these shares since they possess above-average capital appreciation potential. Although nothing special, the 1.3% dividend yield is another plus. In sum, Brown-Forman, ticker BFB, is today's one stock to buy right now. This marks the end of the formal presentation, and I will now tackle your questions. All right, so give me 1 sec to go through the questions. Okay, there's one question about what we consider long-term. That's actually a pretty good question because that differs depending on who you ask. At Value Line, we consider long-term 3 to 5 years out, which is why our projections are out to that period. I know for some traders, long-term could be a year. If you're a day trader, long-term could be 2 days. But we look at it as 3 to 5 years considered long-term. I mentioned our timeliness ranks earlier. They look at, they evaluate a stock's prospect over the next 6 to 12 months. And of course, we covered the 18-month target price range, which is 18 months. And our 2022 to 2024 projections and target price range is, of course, 3 to 5 years. All right. Another question on our timeless ranks. If a stock is a 5, are those suggestions to be shorted? No. We don't typically recommend shorting. 5s just mean that we think they're going to lag the broader market return, but that doesn't mean decrease in value. So far the market has increased in value by about 15%. And our 5s, they might only be up 5%, but it doesn't mean decrease in value. In this question, in the hard copy Value Line, it's easy to flip through the reports on similar companies as they're grouped together. Is there a way to do this with the electronic version? Yes, there's a couple ways. So I'm going to go back to the dashboard. And I'm going to pull up the current issue of the Value Line Investment Survey. That's this week's report. So it's about 135 reports. I can sort them by industry. You can customize the columns to show what data you want to see, but I've also provided links to all the available PDFs. So it's very easy to open these up. You can open them up in new tabs. And all the information is right there. Like I said, you can customize and add any one of these data points to your display. For Brown-Forman, the PE is well above the current market norm of 16 or so. It's a little higher than that, but I get your question. How do you evaluate a 2 times PE? It seems expensive. Yes, I would say from a PE perspective, this stock isn't necessarily cheap. However, if you look at the trailing 12 months right there, the stock was actually trading at 32 times earnings, and the median, which actually is the average over the past 10 years, is also a lofty 24. So I would argue that Brown-Forman always trades at a pretty significant premium to the market. And I think that stems from a company that just has very good growth prospects and has grown fairly quickly over the years previously. You can also see from the annual rates box, for instance, earnings have increased on an average of 7.5% over the last 10 years, and we actually expect that to actually increase significantly or almost double over the next 3 to 5 years. So I think the PE is warranted. Are there certain ratios or metrics that you pay attention to more than others? And can you explain the relative PE ratio? All right, I'm going to take the second part first. So we just talked about the 29 PE, and the relative is how that compares to the median of all stocks that we cover in the 1700 universe. So compared to that median, Brown-Forman trades at more than 1.6 times that amount. And all these numbers are updated each week on our website. And then as far as certain ratios that I pay attention to, and obviously if you ask any investor and any analyst, they're going to give you a different list. But me personally, I like to look at price to cash flow, which you can do actually in the value line chart directly. Of course, I look at PE, book value, and I always look at top line and bottom line growth. Well, I know we used earnings in our screen, but it's also important to look at revenue growth, especially now with companies buying back so much stock. It's making earnings per share look perhaps better than it really is, but it's much harder to manipulate the top line. Do you consider long-term history when making recommendations and determining rankings such as timeliness? Yes. The timeliness rank looks at historical figures to generate the rank. All variables that go into the timeliness rank are historical and known. And then, of course, as an analyst, we're always looking at historical growth rates as one factor, albeit probably a small one, to project outward. Obviously, you don't only look at the history when evaluating a stock. The future is what moves the stock price. I have a print subscription of VLAS. Can I switch to an electronic version? Yes, that's not a problem. You can call 1-800-VALUE line and speak to an account representative. Here's a question on why Brown-Forman as compared to the other names on this list. As I mentioned, the 12 stocks in there were all excellent. I just looked at each individual one, and I thought Brown-Forman's kind of just ticked a lot of boxes for me. That's all. It also helped that it didn't report earnings today, and I didn't have to rewrite the whole presentation, if we want to be totally honest. If I have a print version of Value Line, do I also have digital access? That depends on the product. That's not always the case. If you have questions, I encourage you to call 1-800-VALUE line to speak to account rep, and they'll be able to tell you what you have access to. And obviously, if you have digital access, they'll issue you a new username and password. And if you don't have online access, that's something you can discuss to possibly add. From the screener, can you show which one is for price appreciation potential? All right, well, I guess there's a few fields, then we can go back there. So we offer several measures of appreciation potential. Of course, we already went over the timeliness ranks. That's stocks you're going to think are going to appreciate over the next 6 to 12 months. The 18-month target price range we also mentioned is just that midpoint for 18 months. And then we also provide our projected 3 to 5 year total return percentages, both the low end of our range and the high end of our range. Will this presentation be available for later review? Yes, it'll be posted on our website and our YouTube channel within the next 48 hours. This webinar is good for when to buy. How about when to sell? Okay, well, there's a few. Obviously, you can look at all the ranks we've talked about. When the timeliness rank is no longer 1 or 2, or if it moves to 3, 4, or 5, you might want to consider selling. If the midpoint of the 18-month range decreases significantly, that may show clues that a stock is overvalued presently. The same goes for our 3 to 5 year target price range. If the percent gains decrease significantly, or what happens a lot is a company's current stock price will already be trading in our 3 to 5 year range. That's a pretty good clue. I'll throw one more out there because I mentioned that I like to look at cash flow per share. When you look at the stock chart on our report, the little dashed line is the stock price, and then the solid line with the dashed end is our cash flow per share. When a stock price starts trading well above that line, that's usually a pretty decent indication that that stock is overvalued. So those are all potential sell triggers. And of course, the analyst commentary will say whether we like this stock or not, or we think it's overvalued, and recommend taking profits or anything like that. Does Value Line offer subscription services to tell you when to sell? Yes, several. Obviously, I mentioned a whole bunch when it comes to the Value Line Investment Survey. We also offer model portfolios that are all actively managed and run by senior analysts, and they literally tell you what to buy and what to sell directly. These portfolios are updated weekly or more often than that. Those are all part of our stock selection services. And 4 model portfolios come with the Value Line Investment Survey, which we can quickly look at. So these are all within the Selection and Opinion newsletter. This comes in digital and in print. This comes out each week. Each of the 4 model portfolios gets a write-up, what's going on with the portfolio, mentions if there's any trades this week. As you can see, Portfolio 1, finally we were making one change to Portfolio 1 this week. This stock is being replaced, so there's a sell trigger. And then each one gets a table with updated information every week. And as you can see, there's brief descriptions about investor suitability and how the portfolios are set up. For even more advice and recommendations, we offer products such as Value Line Select, Special Situations, and Dividend Income and Growth. They're all full package stock recommendation services. Sometimes a stock has a timeless one, but its price is high. Does that mean it's still a buy? Yes, from that metric it does. That means that according to the timeless system, we think it's going to outperform the market over the year ahead. So apparently there's a lot of momentum there. Value Line used to provide overview of the various groups of stocks like beverage, but now does not. Is such available? Yeah, so we actually put out industry reports. We've never stopped doing that. I can show you that. So if we go back to, let's say, Brown-Forman's report, and we go to the industry module, we put out a full industry report on the beverage industry. Also, from the peers module, you can see how Brown-Forman stacks up versus its competitors. And obviously using actually Constellation is measured right there versus Brown-Forman. Obviously, using the screener, you can focus on a particular industry and then screen down to compare them. And then one last thing we offer, or an additional thing we offer, you can plot stocks next to each other using our watch list function. This was one I happened to set up a few months ago. So you can keep track of stocks that you're interested in or direct competitors. Here's a question. Yes, our website is valueline.com. You do not need a user ID or password to view our publicly available content, but for a lot of what I showed you today is, of course, subscription only. There seems to be several questions about print versus digital. Our print product is, has been around for generations. We'll always have it. We love it. You can obviously get all the information needed to build and maintain a portfolio of individual stocks. But I do have to admit that our website and digital offerings have more information. And of course, investor tools like a screener, which you can't provide, in a print product. Here's a question. Do you know any companies that specialize in metals innovation? Not off the top of my head. I apologize. I'm going to take a couple more questions, but this is actually a good example of if I don't get to your question or I don't know your question, please email me directly, and I will try to answer them after this presentation when I can do some research. My email address is igendler@valueline.com. That's IGENDLER@valueline.com. All right, I don't see any others. If I missed your question, I apologize. Please feel free to email me with it. And thank you very much for joining me today. I really appreciate it.